Let's start with a scenario. Imagine you're at your local coffee shop. The person ahead of you pays $14 for a triple mocha matcha whatever latte with oat milk and 2 shots of regret. You, on the other hand, just realized you're paying $260 a month for car insurance. And you don't even drive to work anymore. Why? Because working from home is your new reality, yet your premium hasn't gotten the memo. Sound familiar? Welcome to the car insurance conundrum of 2025, where rates have skyrocketed and the average American feels like they're financing a Ferrari while driving a Ford. What's driving up the cost of insurance in 2025? First, let's address the elephant in the garage. Car insurance premiums are rising across the US. According to recent data from Investopedia, rates rose a staggering 15% in 2024 and are predicted to climb another 5 to 7% in 2025. This isn't because insurance companies are suddenly feeling greedy. There are real, tangible reasons. One culprit is inflation, which has hit everything from car parts to repair labor. Thanks to technology-packed vehicles, a simple bumper repair can cost more than a vacation to Cancun. Add climate disasters to the mix, hailstorms, floods, and wildfires, and insurers are absorbing more losses than ever. Axios recently reported that new tariffs on imported auto parts could hike insurance rates by an additional 7% nationwide by the end of 2025, like Florida, Texas, and California, already struggling with high premiums, are feeling it the most. Smart ways to cut your insurance costs in 2025. So what can you do besides cry into your glove compartment? Plenty. First and foremost, you need to shop around for insurance like it's Black Friday. Too many drivers stick with the same insurer for years out of loyalty or laziness. But prices vary wildly between companies, and getting at least 3 quotes with identical coverage options can uncover hundreds in savings. NerdWallet, Kiplinger, and CBS News have all echoed this point. Don't be loyal to your insurer if it's not loyal to your budget. Bundling your policies is another proven trick. Insurers love multi-policy customers, and they'll reward you for it. Whether you pair your car insurance with homeowners, renters, or even motorcycle insurance, you can unlock discounts of 5% to 20%. It's like ordering a combo meal instead of a la carte, cheaper and more satisfying. Another big way to cut costs is to raise your deductible. A higher deductible, say going from $500 to $1,000, can slash your premiums by up to 40%. Of course, this means you'll pay more out of pocket if something happens. So this strategy only works if you have a rainy day fund stashed away. Now here's a juicy one. If you're not driving much these days, your rate shouldn't act like you're a cross-country trucker. Many insurance companies offer low mileage discounts or usage-based programs. Progressive's Snapshot and similar apps track your driving behavior and mileage and adjust your rate accordingly. You could pay less just by keeping your vehicle in park more often. MetroMile, Allstate's MileWise, and nationwide Smart Miles are all part of this growing trend. With remote work here to stay for many Americans, this could mean significant savings. Let's talk about credit scores. In most states, your credit history affects your premium. That's right, your driving might be spotless, but if your credit's in the gutter, your premium will be sky high. According to the Wall Street Journal, drivers with poor credit can pay over $2,800 annually, while those with excellent credit hover around $1,300. Every time your credit improves a tier, you might shave off $375 a year from your rate. That's a lot of guacamole. If your car isn't exactly showroom fresh, you might want to rethink full coverage. Here's a tip: if your vehicle's value is low, it might be costing more to insure than it's worth to repair. Dropping comprehensive and collision coverage could save you over $1,100 per year. Just be honest with yourself. If your car's best feature is that it starts most of the time, is full coverage really worth it? Most people forget about the buffet of discounts insurers offer. These aren't just buy one get one gimmicks. They're real and they're stacking. Things like paperless billing, auto-pay enrollment, signing up online, being a good student, having a clean driving record, installing anti-theft devices, even parking in a garage can all qualify you for discounts. Progressive, Liberty Mutual, Government Employees Insurance Company, and others practically throw incentives at you if you just ask. You'd be surprised how many discounts are buried deep in the fine print. Of course, the best way to keep your insurance costs low is to drive safely. Avoid tickets and accidents like they're potholes. A clean driving record is golden in the eyes of your insurer. It's not glamorous advice, but it's arguably the most effective. Similarly, taking a defensive driving course can earn you a discount and maybe even teach you something new. And here's one you've probably never considered: VIN etching. This is where your car's vehicle identification number is etched into the windows. It deters theft and can qualify you for up to 15% off with certain insurers. Dealerships charge hundreds for it, but DIY kits cost as little as $25. Think of it as a tattoo for your car with benefits. The future of insurance. Now, let's take a glimpse into the near future. With rising costs continuing into 2025, states are stepping in. California is still benefiting from Proposition 103, which requires insurers to get state approval for rate hikes. Meanwhile, states like Michigan and Florida are tightening rules around personal injury protection and lawsuit thresholds. Some states are considering banning the use of credit scores in rate calculations, following the example of Washington and Oregon. Transparency and fairness are becoming hot topics in the insurance world, and not a moment too soon. Industry-wide competition is heating up. According to MarketWatch, more drivers are shopping around, and insurers are starting to feel the heat. Some are responding by offering flexible plans, perks, and price breaks to attract new customers. Others are adjusting underwriting models to focus more on real-world driving data instead of outdated demographic assumptions. That means your good driving habits may soon matter more than your ZIP code. Tariffs, on the other hand, are the wild card. With new import taxes on car parts, the cost of repairing vehicles is going up, and insurers are adjusting premiums to reflect this. Experts predict that rates could spike by another 5 to 7% if these tariffs remain in place throughout 2025. That's yet another reason to reassess your coverage and find the best deal now. The road to smarter insurance. So what have we learned? That car insurance in 2025 is as unpredictable as a toddler with a juice box, but with a little knowledge, you can stay ahead of the curve. The key is to be proactive. Reshop your policy every year, especially around renewal time, and never assume loyalty gets rewarded. Bundle your coverage if you can, raise your deductible if it makes sense, and switch to a usage-based plan if you barely drive. Keep your credit score healthy, trim unnecessary coverage, and cash in on every available discount. Most importantly, drive like your premium depends on it, because it does. Whether you're navigating city traffic, suburban school zones, or just scrolling through Netflix while your car collects dust in the garage, one thing is clear: you don't have to overpay for peace of mind. Insurance should protect your car, not drain your wallet. Now that you know the tricks, go forth and conquer the open road and the fine print. Your future self and your bank account will thank you. And there you have it, folks. If you found this video helpful, do me a favor. Smash that like and subscribe. Drop a comment below and tell me, how much are you paying for insurance? And how much lower are you planning to go after this video? Thanks for watching. Drive safe, stay smart, and I'll see you in the next one. Peace.